All right, let's talk about one of the biggest and honestly most misunderstood numbers in all of crypto, market capitalization. We see it everywhere, but what is it really telling us? It's time to look beyond just the price tag. So, to get started, let me ask you a question. Just look at these two crypto projects. If you could only see their price, which one would you guess is the bigger or more important one? So you've got coin A worth a teeny tiny fraction of a penny. And then you have coin B trading for well over $4,000. Your gut reaction is probably to point at coin B, right? I mean, a higher price has to mean it's more valuable. But what if I told you that's not the whole story? Not even close. See, to really get the right answer, you have to look past the price. You need to understand a metric that gives you a much truer sense of a project's real scale in the market. And that metric is market cap. Put simply, market cap is the total value of an entire cryptocurrency. Think of it like this. It's not the price of one single coin, it's the price tag for all the coins put together. This gives you a much better gauge of its popularity and just how big of a footprint it has in the crypto world. And what's great about this concept is that it connects directly to something you probably already get, the stock market. Just like a company's market cap is the total value of all its public shares, a crypto's market cap is the total value of all its available coins. It's the exact same idea, which makes this whole thing way easier to understand. Okay, so you might be thinking, if it's such a big, important number, the math must be super complicated, right? Nope, not at all. The math behind it is actually incredibly simple. Let's break down how it's calculated. As you can see, it's literally just two parts. You take the current price of one coin and you multiply it by the circulating supply. And that's just a fancy way of saying all the coins that are actually out there and available to be traded. That's it. Price times supply equals market cap. Simple. Let's just run through a quick example to make it stick. Imagine a project has 10,000 coins out in the world, and each one is worth exactly $1. You multiply $1 by 10,000 coins, and boom, you get a market cap of $10,000. Now, if that coin's price shot up to $10, the market cap would jump to $100,000. It's that direct. Now, that second part of the formula, circulating supply, is super important to get right. It's not just some random number. It specifically means the coins that are out in the wild, the ones being bought, sold, and used right now, the active public supply. And this is a really, really key distinction. Circulating supply is not the same as total supply. Total supply is the absolute maximum number of coins that will ever exist for that project, and that includes coins that might be locked up or haven't even been created yet. We use circulating supply for the market cap because it gives us the most accurate snapshot of the project's real value on the open market today. Okay, so we get what it is and how to calculate it, but the big question is, so what? Why should you actually care about this number? Well, this is where it goes from just being data to being a tool that can help you make better decisions. You see, a higher market cap is more than just a big number. It's kind of a signal. It usually points to higher investor trust because, hey, a lot of money has to flow in to get that number up. It also often suggests more price stability compared to smaller, more volatile projects. But most of all, it clearly shows you where a project ranks in the whole crypto food chain. And this chart right here, it says it all. If you only looked at price, you'd never grasp the true scale. But here, you can see the mind-blowing difference. Bitcoin's market cap is enormous, absolutely dwarfing giants like Ethereum and XRP. This is the kind of perspective that market cap gives you, a sense of scale that price alone just can't deliver. But here's a really important thing to remember. As powerful as market cap is, it is not a magic bullet. Think of it as a really, really important piece of the research puzzle, but it should never be the only piece you look at. So the real pro move is to use market cap in context. For instance, you also have to look at a project's liquidity, like how easily can you buy or sell it? What about its daily trading volume? A massive market cap with almost no trading volume could be a huge red flag. You need these other metrics, plus the general market vibe to get the full picture. A well-rounded view is always the way to go. And that brings us right back to where we started. That coin priced at a fraction of a cent? Well, it might have 1 trillion tokens in circulation, giving it an absolutely gigantic market cap. And that $4,000 coin? It might only have a few thousand tokens out there, making it a much smaller project overall. So now that you know the whole story, the next time you look at a crypto project, what are you going to check first? The price or the market cap?